Listen, if you don't understand market structure, you will keep losing trades. Not because your strategy is bad, but because you're reading the market completely wrong. And in this video, I'll show you exactly how smart money moves price and why most traders get trapped. You've probably seen this before. Price breaks a high. You think it's a buy. You enter. Then the market drops. Or it breaks a low. You sell. Then it shoots back up. That's not random. That's a trap. Let's simplify this. Market structure is just how price moves. Higher highs, higher lows. That's an uptrend. Lower highs, lower lows. That's a downtrend. It's as simple as that, and in this video I will show you how to read the market structure correctly. Without further ado, let's go straight into the video.
All the way up, I'm all the way up. Nothing can stop me. I'm all the way up.
We all know we have just two ways the market can move, which is uptrend and downtrend. For instance, now this is an uptrend. You have something like this, something like this. And for the downtrend, we have something like this. So what qualifies this as uptrend and what qualifies this as downtrend? That because we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then we have lower highs, high, lower low, lower highs, lower low. So that's just this is uptrend and this is downtrend. So let me just do this uptrend. So this is uptrend, downtrend. So once we have this breakout structure like this, once we have this, markets give us a breakup structure. Most traders think once we have a breakup structure, we just have to enter trade automatically. No, it's not done that way. But one thing I want you to note is that market is not always used to clean like this on a real chart. This is just a line drawing. This is just a line drawing. On the real chart, this is not how it used to be. You will see something like this. You see something like this, market going to the upside, come like this, go this way, 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 and come back here, go like this again, go like this, go like this. Basically, you see something like this. It's not going to be straight forward like this. So this is what is confusing most traders. So from identifying the right place to trade. We all know uptrend, downtrend, and wait for the market to retrace and all that. But the main question is, where exactly are we going to take a trade? Where are we waiting for market to come to before we take our trades? So this is just on a normal drawing. This is not how markets really move. So, and this is for this is more likely how market move. So we are going to be using these two examples to explain it. Now, when we have a breakup structure like this, on this trend now, on this trend now, this uptrend, whatever I did on this uptrend is also applied to downtrend, which causes vice versa. This uptrend now, when markets move like this, come down again, it's telling us my bias is in control. Your own job as a trader is just to position yourself. Know where to position yourself. That's the big question. Where am I supposed to position myself? Exactly where am I supposed to position myself? That's the question. We have two ways. Firstly, you can use your Fibonacci retracement, and the second place is just to look for the other block that lasts before we have that breakup structure. What is a breakup structure? Imagine this as a staircase. As a staircase, one step, another, one step before another. The first step has to be below the second one. Do you understand? So then you have to bring the third one. Do you understand me now? Which means one has to break one before you see another one. Which is this. This is what I mean. Market has to break this. Something like this. Let's say we have this market moving like this, come down to this level. So market has to break this one before we have a break of structure. Because this is our low and this is our recent high. So once market break it like this, then we are now having a what? Break of structure. Then market will still come down again since we are in uptrend and still break this one again. Now we are now having what? Another break of structure. Come down again, break this one again. We are now having what? Another break of structure. So with that, we're now having break of structure like this. This will be our break of structure. So this one as well. We have a break of structure. So since we now have the break of structure now, so we are going to look for other block around this leg from here to here that cause this break of structure. There should be an other block around here that cause this break of structure. You just have to look for the other block around here before the break of structure happen. For instance, let's say we have it here. This is where we just have to wait for market to come to. Then you continue move. And sometimes I have it here like this, then we go from there. You just have to wait for market to come down. Just have to wait for market to come down before you go to the upside. You position yourself. That's all. That's your job as a trader. Just position yourself, and that's all. So with this, that's first way of knowing where to position yourself. The second way is Fibonacci retracement, which is you can just take this. Let's use downtrend as an example here. Just take your Fibonacci from the up here, then to the downside. Where are you going to wait for? Where you are going to position yourselves around 618 to 0.5 here. Around here to here, which is here. You just position yourself around here. So that's that. As for this since you have this is our last low. This is our last low. So just take your Fibonacci adjustment from the last high to the last low. So where are we going to be waiting for price like that? We're going to be waiting for price at 618 to 0.5 here. So that's it. As simple as that. You just have to wait for market to come like this, start in here and down to the downside again. That's all. Market doesn't move like this most of the time. Market don't move like this most of the time. So markets move like this most of the time. And this is where the confusion always happens. Let's clear this so that we can have a clean chart. So market move like this most of the time, and this is where that's where the challenges is for most traders. So now you have this. You say you see a break of structure, you wait for market to give you a break of structure, then you wait for the other block, then you go from there. Now we have this break of structure here. We have a break of structure here, right? We have a break of structure here. We have this break of structure now. Since we have the break of structure now, what's the next thing for us to do? So now we are going to be waiting for market to come down like this. But sometimes market might not stop here. It might want to come down here or come down here. Sometimes market might want to come down here before it continues to move. So the problem is most traders will stay here, wait for the market here. Most traders will have a position here. or here. And with this move now, I've already hit a sell. So you just have to look for the one that is perfect for you. That's why you cannot be winning or trade. You lose some and you win some. So most of the time, market will come there and respect your zone because you also now let's use the Fibonacci retracement that I said earlier, which is here. And we're expecting market to come to 6 to 0.5 on 618. You see, here now market will just clear your position and that's all. And it will eventually go to your direction that you are expecting. So this is it. So let's go to the chart and I will show you some example so that you can see, can understand what I'm saying. So first off, as I said earlier, I told you market doesn't move just straight line as I said earlier. So as you can see now, this is an example here. See, this is nothing compared to the line I draw earlier. But we still have to understand it because this is the language that the market speaks. So the more you understand it, the better for you in this market, in this forex trading journey. Now, this is it. Looking at this now, we have this. This is our breaker structure. This is a breaker structure here now. This is a breaker structure. Another breaker structure. Now, where is now the order block that causes this breakup structure? Where is the order block that causes this breakup structure? So this is the order block here. Now this market come back to start in and move from there. So now let's use the second method, which is Fibonacci retracement. Let's see. So you take it from the downside here to the upside here, which is around 0.5 and 600. That's where you position yourself. Now, from there, you target the eye here. That's it. Now, let's look for another example. On the second example here, we are going to be using a sell move for the example. Now, we have this breakup structure here. We have this one here. This is a breakup structure. Here. So where are we going to position ourselves for market to tap us in and continue the sell move? Now let's do the Fibonacci retracement that we used earlier. Then you start from the up here to the downside here. Do you see? 0.5 to 618. So in between this 0.5 and 618, it always works. It always works. So that's for you that cannot identify order block. But you can understand identify order block. This is another block sitting right here. This is another block sitting right here. And it's as simple as that. So with that being said, that's the end of this video. Please like this video, subscribe, and turn on the notification bell. Peace.
All the way up. I'm all the way up. Nothing can stop me. I'm all